Hello, everyone. Welcome back to today's weekly market outlook for the 30th of January to the 3rd of February. Super glad to have you again. This is 𝐖𝐄𝐄𝐊, the head market analyst and trainer for EQ Markets Global. And this week, we're going to look at more of the economic data and what is going to be happening in the market so we stay abreast with all of these informations, hammer ourselves with the informations, and also make proper trading decisions. All right, so we're going to jump right straight into the economic data we're expecting for this week, right? So a whole lot of economic data are going to be released this week. You can see the bunch of them. High impact expected news, all for this week. All right. And then more so, we're going to be expecting bank rates and interest rate hikes from the US. Okay. We're going to be expecting that from the US federal fund rate, and also we'll be expecting one from the Bank of England and as well from the European Central Bank as well. We're going to be expecting that. All right, but before I come into that, all right, for Monday, we're void of every high impact expected news for Monday. So January 30th being Monday, we're pretty safe for those people who want to use technical methods or strategies to want to trade the financial market. But from Tuesday, the January 31st, we will be expecting some few news to be eating the Canadian dollar, the Australian dollar, and as well the New Zealand dollar. Of course, we'll be expecting unemployment rates and employment changes quarter on quarter to come out for the New Zealand dollar, okay, and also the consumer confidence for the USD, right? But most importantly, we'll be expecting on Wednesday the job opening and labor turnover um j- job opening and labor turnover survey for Wednesday, and that's going to be 4 p.m. Nigerian time. All right, so we have to put that down. 4 p.m. Nigerian time, we'll be expecting the job opening and labor turnover survey, and that's going to cause some form of volatility, high impact expected volatility in the market, affecting especially the United States dollar, right? And of course, the data are there. Last month we experienced about 10.46 million. This month we're expecting this quarter, rather, we're expecting something a little lower. Okay, and then also we'll be expecting the FOMC, which will be leading, which will be coming alongside with the federal funds rate. And now we already know that the interest rate in the US is about 4.5%. All right, but in order to combat inflation, already Jerome Powell and his team have already said they are going to continue to taper interest rate until they are able to fight inflation. This is not so common with the US, as we will also be looking at some interest rate hikes also coming out from the Great Britain and as well from Europe. But let's focus on that of the US. All right, we're going to be experiencing a 25 basis points interest rate hike. All right, which will be seeing their interest rate come to 4.75%. And of course, these numbers in the coming months or in the coming quarters are most very likely to go up 100, more like 100%, most likely to go up to even 5% or to 5.5%. All right. So let's keep that in mind that the US will still continue to hike their interest rates. But then for today, for Wednesday this week, we're expecting a 25 basis point. And also, of course, we're expecting from the Bank of England as well their monetary policy report, which will then bring also a 50 basis point interest rate hike, bringing it from 3.5 to about 4%. All right. And then also from the European Central Bank as well, we'll be seeing interest rate hike. Already the governor and his team as well from the European Central Bank are also bent on increasing their interest rate until they are able to fight inflation very well. So we're going to be experiencing about a 50 basis point interest rate hike, and all of these, of course, we know are very high impact news that we are expecting. Then good news, good news, good news, good news. On Friday, being the first Friday of February, we're going to be experiencing the non-farm payroll. Okay, the non-farm payroll details will be coming out, and boy, these data are not so good compared to what we saw last month. Okay, so what we saw last month, we experienced about 223,000 job employments in the US, and then these numbers are to reduce by over 30,000 job employments in this month. Okay, bringing it to about 193,000 job employments that we will be expecting. So of course we'll also be talking about that. If this definitely happens, of course we know the adverse effect it's going to have on the United States economy. Simply means possibly we're going to see more devaluations of the United States dollar, showing that things are not really working really well in the US economy. So yes, we have to put all of these in mind while we trade for this week. So just briefly, we're going to go into looking at the United States dollar index to also see what is happening there with all of the economic happenings that we're expecting this week. What exactly is the fate of the dollar, right? I know a lot of people will be asking that same question. What exactly is the fate of the dollar, right? So looking at the dollar index, this was the same analysis we made last week. Nothing. I did not change anything because looking at the market is still in view and in play of what we analyzed last week. So what did we say last week? We said we might most likely see a continuous devaluation of the dollar back into this zone, all right, of which it's currently on the zone, but it might most likely still fall down a little below. Okay, so all of the economic news that we're expecting might also crash the dollar, and then of course it's going to definitely pick up. It might not get to where this trend line is drawn, okay, but we're going to see a stronger dollar after all of these high volatile news that we're expecting for this week, right? So for the short time, we're going to be experiencing the dollar devaluation, okay? If the news that had been released happens as it is planned, right? If we see that, then we should know that the dollar would be devalued. And then, of course, for that short period of time, you can take advantage of the massive sell we're going to be experiencing, perhaps on Euro USD, GBP USD, and and the likes. Okay, so but then before we come into analyzing all of that, let's also look at the currency strength meter to also know what currency is strong at the moment, what currency is weak. So at the moment, as at the time of making these presentation, the euro is the strongest currency. Okay, the euro is the strongest currency, as we can see here. All right, we see the euro. It is the strongest currency. Also, the Great Britain pound was very strong last week, remember? But then, okay, we've seen a little reduction in the strength of the Great Britain pound. And then, of course, the second to strongest is the Swiss franc, right? The Swiss franc is one very notable currency we need to always be looking out for. And then, of course, Great Britain pound and the New Zealand dollar are of almost the same family this week. All right, they are strong, but of course, we tend to see some form of devaluations as well on the Great Britain pound and the New Zealand dollar. Right, so the weakest currency so far we see this week is JPY. Sorry, we see JPY. JPY is the weakest currency we see this week, and then as well, USD is down. All right, but trying to move up. Okay, we already saw that from the dollar index that I showed you. I showed you just in the last slide, right? USD is down, but it's still trying to pick up, all right? And that's why, of course, you see the bullish arrow here. But then, notwithstanding, USD is down at the moment. And so, of course, as you know, pairing the weakest against the strongest, it simply means that we find good opportunities on Euro against the JPY or CHF against the JPY. And then, of course, USD is trying to go bullish, so we can pair the USD against the JPY. We can also find good opportunities on Euro USD or Euro CAD, Euro AUD, as that would be one of the best bets that we will be looking out this week. All right, so if you're just joining or you're just coming to this YouTube channel, I sincerely welcome you, and I want you to stay up to date with every information that we give on this on this YouTube channel. All right, so just before I continue to make analysis of your favorite pairs and what we're expecting the market to get to, where you should possibly take a buy, take a sell, I need you to do one favor, right? Just to encourage myself and my team who work tirelessly to put out brilliant informations like this one. All right, I need you to subscribe to this YouTube channel. While I'm saying this right now, subscribe to this YouTube channel. All right, if you've done that, please turn on the notification bell, put it on all so that you get notified every single time we drop valuable and insightful contents just like this one. All right, if you've done that, also don't forget to visit www.eqmarketsglobal.com. All right, www.eqmarketsglobal.com, and also subscribe to all of our channels, all of our social media handles. We're active everywhere on Facebook, on Twitter, on LinkedIn, on Instagram, and also on YouTube. We're very much active. All right, so do also subscribe to all of our channels. Stay up to date. A whole lot of good news, a whole lot of bonuses, a whole lot of offers, promotions are coming up. All right, if you don't stay up to date, you wouldn't be aware of them. All right, so quickly, let's look at what we are having for this week. Okay, so already we see Euro USD is having is starting out very strong this week on a very strong bullish on a very strong bullish movement. Okay, all right. So but then forget we drew this channel last week, and of course after the market rebounded from here. All right, of course, if you look at it on the daily time frame, the structure was broken in this trend line, right? So when the structure was broken, we waited for a retest. Congratulations to everyone who took that trade some 2 weeks ago or thereabout. Okay, some 2 weeks ago or thereabout. So currently the market is now moving in this channel, okay, which we were able to spot last week, and then of course it got to the highest part of the channel, and then it was forced to come down. And then at this point where, or of course we know, right? We know, right? Because this is more like obeying the trend line, right? So it's going to definitely rebound from here. All right, that's why we're experiencing the bullish movement. All right, so let me tell you something about this bullish movement on Euro USD that you should take very seriously. This bullish movement is going to continue, and of course, with all the news we're expecting, don't don't see it as a surprise when we see a massive bullish movement, a sudden bullish movement on Euro USD, because this particular zone here, marked red, has to be broken. All right, it's a very strong resistance zone that has hindered Euro USD to continue to move upward. Okay, so most likely this week, one very notable thing about this bullish movement that has started, that we can see very visibly on the 4 hours time frame, is that it's going to cause a break in this resistance zone. And of course, if this resistance zone is broken, then we might most likely see a retest back in this zone, and then Euro USD will continue its bullish movement, right? So that is going to happen most likely this week, a continuous bullish movement on Euro USD. I heard somebody tell me, where is Euro USD possibly going to come into? So let me show you where Euro USD will most likely come into. All right, so let's be looking at in the coming weeks. Okay, by the end of this week or by next week, let's look at Euro USD coming into 1.11515. All right, a bullish movement bringing Euro USD to 1.11515. All right, that being said, let's quickly look at GBP USD. For GBP USD as well, we notice that yes, it's currently in a very significant resistance area. Okay, and so if this resistant area is not effectively cleared out, we can't tell exactly where GBP USD will be going. But if this resistant area holds, okay, strongly, then we will see GBP USD most likely fall back to 1.18592. All right, but if this area, right, is effectively cleared out, right, then we're going to see a bullish run on GBP USD, bringing it to 1.28597. Right. So while we await the break of that particular zone, let's also keep that in mind. Let's quickly look at gold. Gold is having a similar chart like that of Euro USD. Right. It's having a similar chart like that of Euro USD. Okay. So most likely, let me show you some stuff. So why gold is in a very significant level where it is because of perhaps this zone. If you watch here carefully, all right, if you watch here carefully, that's like 1959. If you watch here carefully, this has been a resistance zone on many occasions, all right, 1959. And then the last gold tested was 1946, of which we said that last week that gold was going to test that level. All right. So if this bullish movement holds and if dollar is devalued, of course, definitely, or dollar is devalued here, we're going to most likely see this bullish movement continue to come to test 1959.67 or even 1960. All right. So let's also keep that in mind for gold. And then for US oil, okay. For US oil, of course, we've seen a little sell-off last week before the market closed, okay? We saw that massive sell-off last week before the market closed. Where is US oil going to? Most likely, I would say, in my opinion, US oil is going to find the bottoms of 73 or $74 per barrel. It's currently trading around $79.8 per barrel. But in the coming weeks, we would most likely see a continuous fall in Euro USD, and then it's going to test the lows of 73 and $74 per barrel. So I'm more bearish for US oil, which is the West Texas Intermediate for this week. And then, of course, remember we paired the strongest against the weakest, which gave us GBP JPY or Euro JPY rather. So let's quickly look at Euro JPY and let's see what we have for Euro JPY. Okay. Okay. Just a second. All right, so for Euro JPY on the daily chart, we would most likely see a continuous bullish movement. Of course, we see a bullish pressure showing on the commodity channel index that we have here. And of course, that bullish pressure would most likely come and trade above the 100 level. And of course, if it does that, if it trades above the 100 level, of course, we know that the bulls will be dominating that market. And then we would see most likely a bullish movement, which will see Euro JPY come into around 142.892. All right, 142.892. All right, so let's keep that in mind. Right, it's going to make a triple test here. The first test, second test, a triple test, and of course, if this zone is effectively cleared out, then the next area that we're looking at prices coming into is 146.726. All right, so these are the two levels that we need to watch out for as Euro JPY goes on its bullish journey. All right, so thank you so much for staying up to date, for staying with us up till now. I hope these informations were really helpful. My name is 𝐖𝐄𝐄𝐊, head market analyst and trainer for EQ Markets Global. I'll be pleased to take your questions or answer your questions if you drop them in the comment section. All right, drop them in the comment section, and also give a like to this video. Please give a like to this video just before you go. All right, more videos that are coming beyond weekly market outlook that is going to also improve you. So please subscribe to this YouTube channel and turn on the notification bell. Thank you so much, and see you next week Monday for this amazing moment again.